You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Well, good afternoon. Welcome back. Today is Friday, 6th day of April, 2018. Hope you're having a great Friday. Everybody's been working for the weekend, and by golly, it is here. If you're returning, welcome back. If you're here for the first time, a special welcome to you. We certainly are glad to have you with us on this fine Friday. I have a chart up of the S&P 500 E-mini Futures. If by chance you can't see that chart, go to our homepage at cfrn.net on the right-hand side of the page. Click the big microphone, follow the instructions. You'll be registered through the end of the month. That means you'll have one-click access to the show each and every day. You can also go to youtube.com/cfrn/live, bookmark that page, and again, one-click access. Well, the president, busy man, he said yesterday, or last night, he threatened another escalation in a rapidly escalating trade battle with China, who has, of course, vowed to retaliate. White House said in a statement that Trump was considering new tariffs on $100 billion worth of annual imports from China. That follows the Office of the U.S. Trade Representative's announcement earlier this week of plans for tariffs on $50 billion in Chinese products. And the market took it a little hard last night. Now, we talk about important prices, important areas, almost always being tested. And we've had some great opportunities to point it out this week in particular. Although it holds true week after week. But back to where we are now. We talked about this last night in the Partners Workshop. The weekly trading zone, obviously that's an important price, an important area. And then the Concierge Trade Alert, that's an important price, an important area. So it's not that unusual that we triggered, almost got to the zone, back below the trigger, triggered, hit the zone, back below the trigger, hit the zone, back below the trigger, flew through, came back, and then did another 16. I mean, it was quite a day. Then we stalled out here and consolidated in the weekly zone. And right here is when the Concierge Trade Alerts were emailed out last night. So everyone had opportunity to get on board before this move from 42 took us down to 22. Now why 22? Why did we stop at 22? High of the day. High of the day, double top. Pull back to the zone, confirm good resistance, and launch. Important price, important area. And I drew that little rectangle to just kind of highlight it. Almost to the tick. Maybe it is to the tick, I don't know. And so where are we now? Consolidating at a weekly trading zone. We also sit on the S&P last night. I think it was 65, and we never got up into that area, so there was no triggers on the long side. I'll double check and make sure that's correct. Michael, if you're ready for the recap, you can pop on in here.
Okay, I am ready. I will hop on in. Hang on, let me slide that over. This, that.
I can see it.
Excellent.
I'll hit mute.
Excellent. Okay. Okay, Gary, first time listener. Typically what we do, I mean, I know you were in the room this morning too, but typically what we do is we'll come in and Dwayne will give current news events, numbers around the world, different markets. I'll do a recap of what we did in the room in the morning, and then we have guest speakers come on. So usually John's going to come on usually. I don't know if he is today, but usually he does. And then Dwayne goes over the trade alerts. I know the Crude trade alert last night gave over 100 ticks in 1 hour today. It was pretty good stuff. But, okay. Let me start my part. All right, good afternoon, everyone. Today is Friday, the 6th day of April, 2018. If you have not taken a free trial with us, go to the homepage at cfrn.net. And right up here at the very top, it says sign up for the CFRN live training room. 100% free trial. User indicators on our strategy. Click here. When you click there, you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click that confirmation link, oh, sorry. when you click here, you're going to be brought to this page. I skipped this page. On this page, all we ask for is your email, your first name, and how you found us. Hit the submit button, and then you will be sent to confirmation link, okay? I just created the new password for next week, the new password and link for next week. So all you guys who just started the trial today, you'll be sent that Monday morning, okay? Yeah, so that's that. Now, the results. Okay, the spreadsheet. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. This spreadsheet actually goes back 5 years, over 5 years now. It goes back to January 2nd of 2013. We've changed the format a little bit along the way, but the information is still the same. Well, there's actually more information now than there used to be. Today, as I said, 6th day of April. We made 10 ticks on the euro. Just what's out on the blog, Brad. We made 10 ticks on the euro. We made 21 ticks on crude. We lost 8 ticks on gold. And we had 13 ticks on the ES. So that put us up $355 a contract, $355 per contract. Today, that's gross. Today, it took 64 minutes and 7 trades to get to the goal for the day. At that point, we're up 135. And we took a total of 12 trades. So on the month now, we're at $1,042.50. That's over 5 days, averaging $208 per day. On the year, we're at $10,396. That's over 63 days, averaging $165 per day. Okay, $165 per day. All right. Okay. Let's minimize that. We'll go through what we actually did. In gold, we started out in gold with a stop out right here. All right, we went short right down here. It would have been a close below the trend line, which would have been like that. Okay, and we went short and it stopped us out. We missed that one. We had a break even over here. We missed this one. This would have gotten it back for us. And we had another break even there. A couple more in here that we missed. And then we get into the break. During the break, it was just a mess. There really wasn't anything you could do in there during the break. Okay, that was gold for the day. Euro. Okay. All right. On the euro, we only had 2 trades. The first one, we made 4 ticks. We missed this, and we got 6 ticks on this one. Then we got into the break, and looks like there was a long right here. It would have been a long above the trend line that I have not drawn. But that would have been the trend line. So it would have been a long above the trend line right there. And that's it on the euro. Okay, so we ended up with plus 10 on the euro. Crude. Now crude oil. I'm surprised it didn't get all the way down to 62, but there's a lot of buying pressure right here at the 62.10 area. If you go back and look on a 15-minute chart, you see that? 1, 2, 3 times it came here. And there was a lot of buying pressure. And it's not just today either. That area right here, a lot of buying pressure. Right there, buying pressure. Back here, after the API numbers came out, buying pressure. All at that area. Okay, now you see this area up here I highlighted that Wednesday at about 10:15. And I said, look for price to get back to there. And then the inventories came out and price got back up to there. Consolidated, came off it, went back to it, came off it, went back to it, came all the way down here and went all the way back up to it today. And now I was looking back at that 62.10 area. That seems to be, there's a lot of buying pressure there. A lot of buying pressure there and a lot of selling pressure up here at 63.60. Okay, but let's get to what we did today. Okay, started out right in here, this long trade right here on the crude. We missed that one. We had a break even there. We got +4 on this one. +5 on that. +5, yeah, +4 there, +5 there to get us up to +9 on the morning. I missed that nice one right there. I was writing down the +5 on this, and that one happened. Sorry, I missed that one. Then in here, it looks like it was going into the low of the day right here, so you didn't have room to put a trade on there. That's why I didn't highlight it. But we did get 12 ticks on this right here. We picked up 12 more to put us up at +21, and we had a break even right there. And since then, there's buying pressure right at this area. So I've got pushed up off it. So we ended with a plus 21 there. Okay, now the ES, we took a couple over here on the ES today too. Come on. See, I had this break even right here, and then I drew this box. I wanted to see price get out of that box before we started trading it. No, wait. Yeah, I guess I did. Is that box going the wrong way? Anyway, it doesn't matter. Once price did get out of it, then we were able to trade it again. Yeah, the box flipped directions. I had drawn the box, but it was facing the other way. And when I scrolled back, it flipped the box around on me. But anyway, once it broke out of it, see, this is where the box was drawn, right in here. Once it broke out of it, we took a short trade right here. And we got 8 ticks profit on that. Then we missed the follow-up short. This was Crude. Had a trade going on right here at the same time is the ES. I had them both going on at the same time. And then I was writing down the results of both of them, and I missed the follow-up trade on both of them. But that was a follow-up trade there. Then we had plus 4 here to get us to plus 12, and plus 1 right here to get us to plus 13 on the day. Since then, there was a short right here. Went up into the zone, came back into the zone, trading in the zone. And there was a short right over here. Okay. And that was it in the morning. All right. All right. Yeah, so that was our morning today. We were plus 13 on the ES. Okay, so back to the spreadsheet. Again, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosure stuff down at the bottom. Or it's all over the website too. But today is the 6th day of April, 2018. We made 10 ticks on the euro, 21 on crude. We lost 8 on gold, made 13 on the ES. For a total of 355. 355. Today it took 64 minutes and 7 trade opportunities to get to $135 a contract, and a total of 12 this morning. So on the month now, 1,042.50, that's over 5 days, averaging 208 per day. And on the year, 10,396, that's over 63 days, averaging $165 per day. Okay, now if you have not taken a free trial with us, and you want to take a free trial with us, go to the homepage here at cfrn.net, and right up here at the top, it says sign up with the CFRN Live Training Room, 100% free trials, user indicators on our strategy. Click here. Just click there, and you'll be brought to this page. Now you can also click right here, or you can click right here, or you can click right here. And there's probably other places where you can click to get the free trial going. Okay. Yeah, so when you click there, you'll be brought to this page. On this page, all we ask for is your email, your first name, and how you found us. Click that submit button and you'll be sent a confirmation link. That's called a double opt-in. That's so you don't get spammed by us. Click the submit button, you'll be sent a confirmation link, and you must click on the confirmation link. Okay, if you don't click that confirmation link, you will not get a free trial. All right, you got to make sure you click on that link. All right, and with that, I can now pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. It is the largest.
Okey-doke.
Yes. You see something? Yeah. Okay, there's all the way up. All right. And it's going.
And there it is.
Going, and there it is. Very nice.
And we're coming back down to this area again.
And Dwayne, remember we talked about those options last night?
Yep.
Let's see. Let's see where they are right now. 24.25s is what I was looking at. Last night they were $230, and today they are $325. They were up to 350, I think, at one point.
You know,
today.
tell them what the thought process was behind. I've got that monthly chart up.
Yep. Well, you see that little ellipse right there that Dwayne has highlighted. We were looking at if the market does break down like we think it's probably going to here over the next month, it's probably going to break down into that area down there. And so I was looking at options last night for all of our active partners who were in the room in the partners meeting, and I wanted to find something down in that area that would be at the money down in that area, because when it's at the money, the current options at the money are worth $2,250 each. And last night you could have bought an option that would be at the money if it got down to that area right there, for $230. Okay, if you bought a put option, $230. And I chose the 24.25 because it had a lot of open interest and it had decent volume. You could still go down to the 2400. That's got a lot of open interest as well. But when I was going through the options, all the ones on the big numbers, the 2500, the 2600, there's a ton of volume or open interest on those big important numbers. So a lot of people think it's going to go down. Okay, how far down? We don't know. But that ellipse right there, I'll let Dwayne explain it to you.
Well, all it is the indicator set and the methodology that we use every morning in the live training room, except it's applied to a monthly chart. It's been back 2013, before 2013, since we had a bullish cross. I mean a bearish. It's been bullish since October of. It's been bullish for 5 years on a monthly chart. Almost 5 years. This is as far back as I can go. It won't let me go back any further. 5 years.
24-20.
Now, yes, were there some scary months? Sure. This one was very interesting because this one, the price will always revert to the mean. And in our case, the mean is the BBC, the bull bear cross. And so this month, price reaches all the way down, tags the BBC. It opened here, comes down here, scares the daylights out of everybody, and then closes right on track, you know. And we have, you know, a little whoop-de-doo here, but we never do get a bearish cross. And it rolls up and rolls away. Am I expecting a bearish cross here? I'm not expecting it. In fact, I'm not expecting anything, just based on historical observance. Given the fact that this candle right there closed below the CFMA1 and the step line, and we've pushed below the 24% retracement. The 38% retracement is where the BBC happens to be right now. And we even do a trend line from here. And so I just easily see price coming down. Maybe spiking the 38 enough to touch that trend line if it wants to. Doesn't have to. The question will then become, okay, is it going to put in another leg to the upside? I'm thinking it will try. So a long trade then back at least up to this trend line area up here might not be, or might be something to consider. But right now, what seems appealing is that this candle is going to come down and do what candles do. Now, in the last 5 years, we've touched the BBC once, twice. That's 3 months. I got to count that all together. That's twice. And then 3 times. I guess we've touched it now 5 or 6 times in 5 years. Pretty amazing. I'm quite surprised with myself that I had not noticed this. Also, along with the candles crossing on the back side, which is something I teach the Concierge Trade Alert traders, as it marches to the back side, You know, it's probably time to look for the exit. So if you're long, this red close below the step line would have been your head for the exit. So from where we sit right now, 26.15, 26.24, down to potentially 25.20. Worst case, it could be a 100-point S&P trade. And to me, it looks like a higher probability that it would go to the BBC than it would to just turn around and take off. But who knows? I mean, the only area really to be of any concern would be the very bottom here of this candle. I mean, 25.30. I mean, when price came roaring down the first time, found support right there. Pushed it back up. But it continues to walk itself sideways and down. So, and here, this is already red and falling. So with this red and falling, there's nothing you could say that would convince me to buy here. We'll see what happens. We will see what happens. Is John here, Mike?
Hang on, he wasn't a minute ago, but let me just check and see. Nope, he's still not.
Okay. Well, alrighty then. Is there any questions in the... Oh, what was the recap of the recap?
Today it took 64 minutes and 7 trades to get to $135 per contract.
Yes, Gary, we do record the show each and every day. Go to youtube.com/CFRN.
And Joan, that was the ES that Dwayne was just looking at.
Now, there's the NQ on a daily. You guys see that, right?
Yes.
Now, if we took this one, oh, and then to answer your question, Brad, you can watch the video recap of every... We do a video recap every day here on the show of the alerts. So you can go to the video archive and have a look at any day you would like. I just want to see what this one looks like on a monthly real quick. Oh boy. My chart just locked up? I've had no issues.
Oh, mine is still moving.
Mine's always waiting up for a response somewhere.
Yeah, but the numbers are still ticking away over there on the side.
Yeah, but my point is I can't.
Oh, you can't move your cursor around.
When I click, I move my cursor, but when I click, it just goes ding, ding, like it's waiting for.
Oh, like it's got a window that's open somewhere you don't know about.
Yeah, yeah. like that. Oh, I can't even shrink it. Okay, there's Crude. I'm locked up on Crude. Okay. Can I get to the bottom of this? I hope so. Oh, wow, that is odd. And that thing was hid behind so much stuff.
There it is. Found the missing window.
Come on. I don't know. Well, all right. I'm not gonna fight with it. Doesn't want to do it. It doesn't want to do it. Don't understand. Yeah, that should have done it. Strange stuff. All right. So, taking a look at the ES last night, the alert that went out said consider selling 26.42. We dropped to 26.22, so that's a 20-point S&P drop. Then it gets back above the trigger, takes another little drop from 22 down to 38. Back above the trigger, another little drop down to looks like 34. So from 34 to from 42 to 34, that's 8 points. You know, that's if you just got one of those a day, what a wonderful day it would be. Back above the trigger, down we go again. Back above the trigger, down we go again. Was that you, Michael?
It might have been me. I think I hit my mic.
Oh, I just heard I heard a voice. It sounded foreign.
Oh no, that wasn't me.
That's my foreign accent.
Mike Reed.
Mike.
I hear Mike Reed. Hey, Mike Reed.
Yeah, that was my foreign accent.
Hey, buddy. I can hear you, but just barely. Can you speak up just a little bit?
Okay.
Yeah,
I'll
much
do
better.
my best.
Much better, buddy.
Okay. I had microphone issues here lately. Anyhow, how you doing?
I'm good, man. It's so good to hear from you. How you doing? Tell us what's been up.
Oh, no. Let's not do that.
Okay.
Let's talk about the market.
Okay.
All right, buddy. When was the last time we talked?
It's been weeks. I don't know.
No, trying to think. It was a little bit after they started their breakdown, or after they broke down. It's been quite a while, I know, because I haven't been able to be on here for a couple, seems like almost a couple of months, to me anyway. Anyways, we think we have a low end down there for a while, or?
Well, I did say just a little bit ago that I'd be surprised if it didn't hold a support, and the fact that buyers came in early and didn't even let it touch. Now that line is connected to the double top that we had the other day. The double top. This was the double top, and then it pulled back, confirmed support, and took off. And then yesterday it ran right down, boom, took a bounce.
Yeah.
And I was expecting it to serve as good support, but they didn't even let it get there. So that tells me there's some bulls out there chomping at the bit. Unfortunately, they don't seem to want to pay. Let me get up last night's. Anybody that wants to take a screenshot, you can do that right about now, because I'm going to display the alerts from last night and give you a chance to take your screenshot. 5, 4, 3, 2, 1. Okay. So we never triggered on the long side, 2665 up here. But numerous opportunities on the short side. And the first one that presented itself came right to the zone. We start a new candle, and it takes us on down. So it was a nice 20-point move there.
Dwayne, you're a little... Oh, I'm sorry.
Go ahead. Go ahead.
I was looking at your chart here, that arrow at the top.
Uh-huh.
You sent out an email alert. Was this what was this overnight on Sunday, or I don't remember when that?
No, this was last night's Concierge Trade Alerts.
Oh, I got you. Okay.
Yeah, this is when this is just. I was pointing it out last night to the guys in the workshop, in the partners workshop, because I sent out the alerts, and then by the time 9 o'clock Eastern rolls around and it's time for the workshop, it's already triggered. So I sent it out during this half hour, and it triggered during this half hour. Yeah.
Well, we had 72 resistance yesterday, and that was hit three times, a double top there, and then near the end of the day, and we had we were looking for 22 to 20. Let's see, 18 to 22 point move off the top for our targets on shorts. So we had nice trade there where they could have gotten 14 to 18 points off of that, and at least. And today we're coming back right from what should be major area for today for me anyway. Got 22.21 down here, and I see we're just above your area. So I don't know if they take out my area.
Well, that area there now, I can't take any credit for that area at all because we overshot the zone. We had a lot of buying pressure. We overshot the zone, and then we took that big nosedive, and then we roared back to that same area. So yeah, that's definitely an important price and an important area, but it's one I failed to pick up on when I was doing the weekly work, I suppose, because I mean, bang, it's right there. Doesn't change the fact. Yeah, go ahead.
Doesn't hurt to add them though, as a viable area.
Oh, absolutely.
I mean, I know you're saying it wasn't a weekly number, but
right.
Still, I'd have them on my chart anyway.
Now, something we've been talking about, Mike, and we even last night, Michael, in the Partners Workshop, we talked about possible option trade, because for us, and with our indicator set and our methodology, the fact that we've had a candle close red below that little black step line, or on the back side of the CFMA1, it is an extremely high probability that price is going to revert to the mean, and for us, that is the BBC, the bull bear cross, which just happens to be at a 38% retracement, which just happens to be right above this little trend line I drew here. And down here, this has already turned red and hooked over and started heading down. So we feel that it's a high probability that over the next month, maybe two, it could be, that price will find its way down into this 2470 area, 2460 area. What are your thoughts about that?
I can see that happening, Dwayne. Had to break the bottom of this kind of a double bottom right now, in a way, and then see that take out the 2532 area on that S&P cash area. Yeah, I'd have to look at my daily charts, but I think that area,
based on your own work, do you see it as a high probability that we'll go here before we take out this little trend line up here?
Let me see what level that is. I'm not sure what level that is, but probably by the distance there, it looks like. I mean, there's a lot more to. I feel like there's more on it. Let's see that line there. Yeah, I think pretty much. This is a monthly chart here, right?
Yes,
so,
and whether it holds, bounces, plummets through it, we're not even talking about that. We're just talking about the fact that it'll move, we think, from where it is now to that area.
Yeah,
to the BDC. Yeah.
I think so, because that's under that last, looking at the monthly chart, it'd be 2 months back. I had to take out that low and it'll put, yeah, that'd be almost a perfect, you know, look for reversal there too.
We haven't had a bearish cross in 5 years. Here's June of 2013, and you know, it almost it sagged a little bit, and then it rallied right up out of there. I mean, in hindsight, looking at this chart, knowing that on a monthly S&P 500 chart, we have been in a bullish position for 5 years. I mean, it just sort of dawned on me this morning that you know, we duck and weave and bob and all this kind of stuff every day, intraday, and that's great. I mean, that's income, that's wonderful. But to know that in my own lifetime, I allowed the S&P to go from 1570 to, you know, 2790 or whatever the high, you know, exact. You know what I'm saying? I mean, how did I mean, there were some scary times, like here. Look at it this month. We open here, we have a red month, and then we open red and go, boom, we plummet, all right? Long wick. But then by the time the month's over, we actually end up closing above.
I remember the S&P at 20, around 250.
Hey, John, welcome to the show. Say hi to Mike. Mike Reed's with us.
Hello, Mike.
Hello, John. How are you?
Pretty good.
Good. Nice to hear from you.
Likewise.
So,
we were looking, John, at options last night. We were talking about this this setup on this monthly chart on the S&P, and Michael looked up some options, and I don't know if he's on the phone or still with us, but there were some option contracts. If you think price is going from here to here, you could pick up some contracts for, I think he said it was $250.
230. 230.
Oh, there you are. Yeah. $230.
Yeah, they're way out of the money, but if they did get to the money, then, you know, you would have just about a tenfold increase.
it's not too bad.
No, not for a month.
No.
Take that.
Yeah.
Yeah, because I was looking at the April 30 OEWs. And if you look at the 2425s, because what we're looking at there on the chart, on the monthly chart, we're looking at it possibly getting down to 2430. So that would be, you know, that'd be one out of the money right there, and that would be a significant increase. I mean, it's already yesterday it was $230 yesterday, and they're up to 325 today.
The same sort of bang for your buck, you know.
Well, without the time decay, if you're long the options.
Michael Williamson asked a question. Did you already answer that?
Let me go look.
He wanted to know what the expiration was on those options.
The expiration is April 30th, and they're 24.25 puts.
What do you think about that overall general idea, John?
Sorry, can you just tell me what you were talking about?
Tell him again, Michael. We think that price is going to go from where it is here to right here.
Yes. Yeah, down to the 24.30, 24.25 area. If we get it, the breakdown that you were talking about, could be coming here yesterday, John.
I'm not so sure. I'm not so sure. I tell you, I got a new theory on what's going on here. You know, we've had a break overnight, and at the moment, look, I mean, it could change later this afternoon if we sell off. I agree with you, but right now we've got a bit of a rally going on, and the reason I should be paying attention is the Nasdaq is, you know, performing much better than the Dow today for a lot of reasons, and that's the first time that's happened in a while. You know, in fact, since this rally began, and the tariff thing is becoming a bit old hat. It's getting a bit long in the tooth, and it's starting to get shrugged off by the market. Also, there's you know, they could come out and negate that overnight. Look, I acknowledge, you know, I said last night we're sort of setting up for an 87 scenario, and that would mean we'd break down like you're suggesting, and our target was 2450 and 22,000 on the Dow, and I'm not ruling that out, but and we could look if we break down this afternoon, it's curtains, there's no doubt about it, because we're setting up for an 87 scenario, you know, with very bad down Friday and probably a bad down Monday and Tuesday, and maybe a Tuesday reversal if they don't nip it in the bud on Monday. Last time they nipped it on Monday, I'm not so sure if we close down today that would happen. But the thing that's got my attention today is the Nasdaq is definitely, you know, compared to the Dow, it's acting a lot better, and you have to recognize that, because if they do, you know, if there is a late rally today, it kind of changes the picture. It kind of improves the picture considerably, and it might avoid, you know, we might avoid a you know, Armageddon kind of thing. But you know, my initial thought last night and by the way, we went short, right? Actually, we went short before the 6 o'clock opening, and I said, you know, I was expecting a down bias for the market, and you know, then this thing happened. We bought the lows last night, and we sold the rally during the night, and rebought the lows a short while ago, because if you look at the chart, you know, we've kind of made a double bottom here. Now it's just an attempt at the moment. We're attempting to rally off that bottom, and actually we're starting to fail. But, you know, I just wanted to bring that point home, because the Nasdaq is stronger. Now, if the Nasdaq, you know, weakens off again and starts leading the way down, and the semiconductors, you know, are already doing that, then it's not, then it's, you know, then this scenario is definitely real, and I would go for it. You know, I think it's worth a shot, because, you know, we don't know what if there's any other bad news comes out, you know, over the weekend or going into Monday, then we definitely could have a you know, a sort of a catastrophic type of event. But the other thing to, you know, the European markets, remember we said, you know, how they're going to cope with this big down gap that happened? Yeah. They actually kind of reacted opposite, and you know, they had the down gap, and then the market turned, and actually the European markets don't look too bad. The other thing that I would consider paying attention to is the VIXs. You know, they kind of broken the back of the VIXs, in spite of the fact that the Dow is down, you know, as badly as it was at the lows. The VIXs are breaking down right now. It's actually improving at the moment, which is another way we might be, you know, I basically said, look, if we get the traction, and if they do manage to rally this thing, it's certainly going to, you know, at least either postpone or potentially negate, you know, the final down move. And the other thing is the market is getting closer to earnings being announced. It's tending to shrug off a lot of bad news. You know, I mean, look, you know, we had this very bad Monday, and then we had this massive reversal. That was a pretty big deal. And the same thing again, you know, every time the market's down, the stocks get bought. And look at Intercept. You know, we talked about it. You know, the Intercept was a buy 2 or 3 days ago. Well, you know, on the Monday morning, I think it was or the lows, and it's actually up on the day today, and so are a number of other stocks, by the way. So the you know, and potential tariff affected stocks like Boeing are actually acting really well today, and so is Microsoft. So and the things that are sort of dragging the market down were Nvidia, Apple a little bit, but Apple's starting to recover. Even Maxim's turned positive here, or turning positive. So the market actually, we could have an explosive rally this afternoon, especially if we go positive on the Nasdaq.
Look at this 30-minute candle, Mike. What's your take on how we wrap this week up, or this day? Mike,
the day and the week.
Yeah.
Okay. Well, hey, I'm looking for this to take out 38.5 area, 38.5, 40 area. If I can do that and not, and stay up there. Not come right back down again.
Yeah.
Then we could end up on a decent note. I don't know we get a big rally or anything, but can firm up anyway.
Well, remember, Dwayne, this kind of reminds me of Friday the 9th of February. It's kind of got the same feel to it. It looked terrible down at the bottom and then suddenly reversed. And you do have a double bottom here. I mean, look, we're in a mega bull market. Don't forget, we're in one of the greatest bull markets of all time. And we've been in a two month correction, which potentially is coming to the end. And just go back to the double bottom again, if you wouldn't mind.
Sure.
Can you do that?
Right there, yeah.
Yeah, we got it.
So look, there's nothing more powerful than a double bottom in a super bull market. That's what really led me to this. And I put this out an hour and a half ago on a tweet, 2 hours ago. I said to watch for this development. So, the Nasdaq is actually starting to give us quite a strong buy here now. And, we've cut $100. We've cut $100 off the Dow's losses. That's pretty impressive. If we cut another couple of $100 off or another $100 off the losses, I mean, this thing is going to start looking pretty potent. And the market has a will to go higher. And I'm telling you, we're in the same way as a 4-month correction from 2015 through 2016 set up for a 10,000 point move. I think this correction is setting up for a 4,000 point move to the upside. And boy, you got no idea. This thing could rip out of here in a way that'll leave people breathless. I'm just telling you that when this market resumes, and it's, in my view, it's very close. Look, I would say, the hell week could be next week. I don't dispute that. There may be one final, throw in the towel type sell-off that could still eventuate. I'm not ruling that out. I've said that quite a number of times because I'm worried about next week. But if we really nip this thing in the bud and we manage to get through this week and we get above your WTZ line, your trading zone line there at 24.
Right.
I mean, forget about it. This bottom is in and it's over. And we'll be going to the next level up there around 24,720.
Dwayne,
yeah,
Dwayne,
Mike.
do you get the you don't get the cash indices, do you?
I don't, Mike.
Okay.
But you know what? No, I take that back. I do have them. Hang on, I'll bring them up just a second.
If you could, if you somehow bring it up to S&P 500.
Yeah. I just gotta.
And then I'll have to go after we can
Okay.
get this to work.
All right, buddy. S&P, come on. Let's get an interactive chart. Okay, this is the S&P 500 cash market, guys. As soon as it loads. Loading.
Yeah. We can do a daily.
Daily? I think it's on daily.
Daily. Line on close. You do a line on close.
Oh, I'm not totally familiar.
Line chart. Oh, okay.
I'm not. Let's see. A line chart like that?
Yeah.
Okay.
There you go. I like to watch that more. If you look at the low in February, and then across the bottom, you see the two probes down there. They're all right around
You're talking about
the
these
second
two?
bottom.
Talking about these two?
Yeah.
And then you got this
The
one
first
here.
Right, exactly. So I'm looking at this as kind of a potential double bottom here, and we have to get past now about the halfway part, about that pullback low from the double top there. Want to see it go up through that.
You talking
area.
about right here?
Yeah, right in there.
Okay.
Yeah, right around there. I can fine tune that a little bit, but in that area. But I like these. I like a line on close on a daily chart.
Yeah, it's not something I've used myself, but it is interesting. And I'll tell you what's really interesting, Mike. The thing that really, the fact that I sat here for 5 years without ever really putting it together, that our most basic setup has been bullish for the last 5 years on a monthly chart for the S&P. I mean,
Yeah.
I mean, there's been like I said, we've had some danger days, but and now I fully believe we're going to get this pullback. Doesn't mean that we're going to take out these low. I'm not saying anything other than I believe the path that will be traveled is from where we are to here, and it certainly may not be in a straight line. But so, was there something else on that S&P cash chart you want to look at?
No, I just was looking at that lows there, the lows there, and
okay,
and our retracement areas. But you could draw on your fib numbers or whatnot. But we do have a big top, and then the first bottom, then a double top, and now what's a potential double bottom? If that's taken out, then there's at least 30 points to go. Let's see, 5, 4, 3, 20 to 30 points on the downside. They take out the 25 to 32 area, then they break down. So I think that's about it, Dwayne. I think I got a hop here too.
All right, buddy. Well, listen, man, it's so good to hear your voice again, have you back on the show, and please make it a point to drop in next week.
I'm gonna try to do that, Dwayne. Mondays and Fridays are best for me. So
okay. Well, you're always welcome anytime, and if you want to talk over the weekend, give me a call.
Sounds great. I might do that. Okay.
All right, buddy.
All right.
Take care of yourself.
Take care.
All right.
All right.
Bye-bye.
Bye.
So while I got this chart out here, John, any stocks in
Dwayne,
particular you're watching?
The thing, a little bit, just to get a little bit more on my thinking.
Mm-hmm.
I agree. This is kind of an incomplete correction because we haven't gone the full 3-wave down leg on a number of indices, and the fact, but on the positive side, the fact that we got cut short, that we didn't break as much as everybody thought, that is a kind of a positive, but it leaves me cognizant of the possibility that we could still get one more sharp down move, and even though right now we've gone to a sell again, and the market's coming off pretty fast here, so this could be a bit of a fake out. Look, we had a head fake rally on the open this morning, and look what happened, right? And we sold right on the highs of that rally this morning, and we just sold the highs again. So if this green bar gets negated to the downside, it will be bad, and it might be, we might go down several hundred points this afternoon. So, and the VIXs have just gone to a buy again. So it's very very fast. It's a very fast market, and just one second.
Now, guys, based on what John just said, and I pointed this out to you a lot, but. Are you still? You need to take that, John?
No, it's okay.
This 10 a.m. reversal. This is something that I teach the guys to watch for. Don't get out of bed expecting it to happen every day, but you'll find that at 10 a.m. each day, especially if you had a strong directional one-way move, that's a real thing.
It came right in this morning, and it happens a lot. And look, in order for a kind of a crash to happen this afternoon, you have to kind of get people, jazzed up, if you like, about the market, thinking that the worst is over, because, you just have to be very, very quick on your feet in this market. Stuff happens at a phenomenal speed, and that's what we try and do every day, is catch these lows and highs, and so we're very, very quick to turn on a dime. And we had a good reason to be going long down at the bottom. You've got the support line down there, and
this line right here, John. I put that in, I think, last night during the back the other day. We had
it's a very important.
We had a high of the day, and then the following day we had a double top. Then we pulled right back to the zone, confirmed good support, and it took off from there. So that double top turned into that support.
Yeah.
I love it when that happens. That's poetry in motion. And here, the buyers were so aggressive that they didn't even let it get back to the area. They let it get near, and they jumped. And that's usually a pretty good sign, whether it's buyers or sellers. And look how aggressive we reached this area here, where last night we said to consider selling 26.42. But we sent out the email on this during this candle, and then it happened.
It's about where we sold it, same place pretty much.
Okay, and so now sellers, sellers.
Remember what I said about Micron yesterday? How bad it looked, and that was sort of a tip-off that all wasn't well.
What's the symbol? Micron.
MU.
Yeah.
It rallied a bit today, but it was very bad yesterday. So.
Micron. Oh, I can put it back on. No. Just some candlesticks, please. There we go. Wow, that thing had a. What am I? Oh, I'm on a monthly right now. Wow, that's kind of ominous, that monthly chart. Have you looked at that?
Sure is. Yeah.
Wow. I mean, if you take out the low of last month's candle.
It's gone from a leader to and it's one of the worst performers yesterday. So, and what's actually happening now is the NASDAQ is reversed and it's starting to outperform on the downside, which is a really bad development, so, and we're going negative on the breadth again. So actually, look, the point is, I had to say what I was going to say earlier, because when a thing is rallying, you don't know where it's going to stop. It stopped at 26.40 or so, right. and now it's going down again. So structurally it doesn't look very good now, and this is the problem with this afternoon. You sort of have a lunchtime rally, and then you sell off in the afternoon. That's a very bad setup for Monday. And as I said, you never know if Trump's going to fire somebody like the Attorney General or somebody over the weekend. That's the sort of thing that could create an 87 type scenario Monday or Tuesday. It feels like there might be more bad news in around the corner. You never know, with all the stuff going on, and especially with the Russian thing too, you don't know what they're going to do in response either. So, but look, this could, the thing is, look, we don't have to go to we don't necessarily have to go to new lows, because the last time we had something like this, if the NASDAQ dropped like another 100 points and then stopped and started going back up, that could be a pretty good buying point. Or if the S&P, got down to, say, not much, maybe 30 points, 20 or 30 points more, and then turned up, it could potentially be a better bottom than this double bottom scenario. But I think the next few days are super critical to this market, because as far as I'm concerned, by the end of next week, the risk of the market downside risk should be fading, should fade, should become less likely, and the upside might become more prominent. And look, when you get these rallies like this that come out of nowhere, what they tell you is, you got to have the discipline to go in and buy the lows when and we got very lucky with this last bottom because we literally got in the Dow around 24,025 or somewhere like that. We got almost the bottom, and we just got out at 24,170. You know, 150 points, not a bad rally for less than half an hour. So but now it's definitely taken on a bit of a there's a cold wind blowing down Wall Street, and there really is one coming. So it's the winds, the chills have gotten the traders. So it is, I'm not. In other words, I'm more in favor of the idea of going for those options now than I was earlier on. That's all I'm going to say. So.
Can you see this Crude chart that I have up? This. Mike B asked me to put this up, and he's pointing out that we're approaching this little channel right here. We're about to hit the bottom trend line, and on this indicator down here, we're going to put in in other words, that's bearish. So how much it will fall, I don't know.
No, you're right. And look, we could go down all the way. We could potentially go down to about 54, 55. Especially, we could go down pretty fast too. Now, the other exciting area today is the metals. We put in a pretty good bottom this morning around 1325 or so. Had a very big rally up to about 1340. And the silver up to about 1640 or so, and they're coming back a little bit. The nugget, I was long the nugget and the J nugget and stuff overnight, and we sold them, more or less near the highs today. And we may be buying them back this afternoon, because especially if they turn higher. The platinum is trying to bottom, so is the palladium. If there's a late spike in the gold, which there could be, there is a potential up spike, around the corner in the gold. But right now it's not acting very well. It keeps rallying, giving back gains, which is not so good. But structurally, the nuggets and things don't look too bad, and the gold stocks. If we were to add a few, if we could close like we did yesterday, where we ended up rallying late in the day, and do the same again today, I think I'd almost swear the lows are in on the metals, because we've really got you've got a potential weekly reversal, a good daily reversal yesterday, and some follow through, but not enough to convince me that we're on our way yet.
Yeah. Boy, this run up, it's amazing. We had on the Concierge Trade Alerts last night for gold, we said to consider selling 1327 if the opportunity presented. So that worked out well. I mean, it went down to 22 and change, 23. So that's a $400 per contract move, and we got another $300 per contract move. And then up here, price races all the way up to our number 1339. Just enough so it goes to 1339. If I can make that out, 1339.1. One tick. So to everyone who is always asked, do you buy the number on a stop or do you wait for a close above the number? That's why it's called discretionary trading. What we do in the mornings in the live trading room, that is 100% rules based. Your opinion, your thoughts, your gut never enters the picture. Okay? But with discretionary trading, it does. So if you bought 1339 on a stop because it went one tick beyond it, then you got stopped out on that trade. Okay? That's part of trading. Don't go looking for some indicator, some oscillator, some crystal ball, some guru that promises never get stopped out again, because that's somebody who cares more about your money than you do. All right, so just don't listen to that. The best trader that ever lived, whoever that might be, they got stopped out. But what they did, rather than trying to figure out how to not get stopped out, they accepted the fact that getting stopped out is part of trading, and so they learned how to take it in stride, let the stop outs do the least amount of damage, not dampen their enthusiasm, and go look for the next opportunity. Period. I mean, that's trading. It's not what you hear and see and get sold so many times, but anyway, go ahead, John.
Yeah, well, I mean, look, when you look at that particular chart, the gold doesn't look too bad here. And in fact, it might be trying to hold just around this level. Obviously, if it breaks back up here above 1336 or so, it's going to look better. And so you can see it's picking up a little bit here. And you know, if it takes out 1339, you know, you could actually have a pretty big move to the upside before the day's out. And I think that would take the gold stocks up with it. So, you know, and you know, it's interesting because this sudden reversal yesterday, obviously, I mean, look, here's a very, very important thing, that the jobs number, which we were actually sort of suggesting we might get a shock down number, and this 103, you know, whether it's some kind of an anomaly or a weather-related issue or whatever, it's a significant. You know what it reminds me of?
What was the number again? I missed that this morning. What was it?
103, I think it's now 105 or 103. Now, you know, this is the bull market in 1997. In February of 1997, we created about 750,000 jobs in 1 month. I think that's the all-time record for the United States. But the interesting thing is, now the Fed kind of freaked out when they saw that, and this was around the time when Alan Greenspan made his comment about irrational exuberance and all that. Mm-hmm. And the Fed, you know, started tightening too early. You know, I think they started whenever they started it was 8 or 9. But you know, the bull market was probably going to die anyway. But with the Fed's help, they managed to, you know, create a Armageddon in 2002. You know, by the time 2002 came around, you know, it was NASDAQ was down 80% or something. So the point being, we have created a kind of a record February jobs number in February, followed by this down jobs today, kind of suggests that the job creation boom may be starting to come undone, not necessarily terminally. You know, the first quarter is always a problem. We actually went negative on jobs, I think, either in 15 or 16 in the first quarter, but it was readjusted, so it didn't it actually looked like up month at the end of the day. And this one could be revised upwardly next month. You know, so but it is a little bit symptomatic of the 1997 thing. Now the good news is, when did the bull market top, and when did the economy top down? Well, later the economy topped out about 2001, or middle of 2000. Bull market didn't end until March 2000. So that supports my theory that we've got enough momentum in this market to take us through 2020 without too much trouble, without really getting into a recession or anything. And that's obviously bodes pretty well for Trump. It may mean that there's a lot more upside in this market still to come, because remember, we were about 990, we were at 6,000 or 7,000 in 1997, and we had 3,000 more points ahead, or 30%, 40% up, actually 40% still to go in the market. So I wouldn't fret too much over this number today, because as long as we if we go back to that kind of Goldilocks scenario, where we keep making 150, 200,000 jobs a month, for the next year or two, I think we're going to be in pretty good shape. But this blowout month last month may be sort of symptomatic with the 1997 peak in employment. And actually it may, I think the lower jobs number now may cause the Fed to back off a little bit on the
interest rates,
on the rate increase.
Yeah.
They may back up a lot, back off a lot actually, because remember, at the end of the day, their job is to create jobs, and they don't want to be cutting their feet off by overdoing it, and creating a recession when we don't need one. So by the way, we are seeing the gold pick up here. The nuggets and things have just gone to a buy here. So I would definitely.
What's nugget symbol again? NUG.
NUGT. NUGT. Yeah.
NUGT.
Yeah.
Okay.
So.
NUGT.
Yeah.
What have I got this on?
And silver's turning up. So you may see a very, very powerful move up here in the metals soon, based on the way we're starting to go now. So.
This is an hourly, so it's a pretty good gap higher open.
Yeah.
Huh. Okay. What else is, let's see, Karen said, not sure if this will have any impact at all, but Powell is due to speak at 1:30.
Yeah, well, I actually believe Powell is, getting more and more respect on Wall Street and confidence, and especially if he's managed to limit the downside so far, if he's behind that. And I think if the market starts recovering here, the credit's going to go to him, and the confidence is going to be much more. He's going to earn his stripes, if you like. Mike
had a question. So, Karen, hope that helps. Mike asked, does crude have to follow the index? Can it divert? To be honest, Mike, I don't think I got your question. Maybe you can, Karen said thank you. And could you ask that again, Mike, in some kind of different way? I'm not sure. I want to give you the best answer that I can. Now, Williamson, John, says, if gold is starting to go up, which you just mentioned, should we expect the indices to drop?
Possibly, yeah, today, because we're sort of overdue a spike in the gold. The gold has not reacted very much to this market going down, and it may start to do that in the same way as it did in 2016. In February, in the first month of 2016, January, the gold and the gold stocks all went down with the market. But in the second month, in the February, which I would say is like February and March and April right now, the gold stocks started to go up, and they went up dramatically, because when the gold finally got going, it had the biggest move up in 30 years. And my belief is you can't have a 30-year record run in gold followed by a year or two correction without the next year to follow being something pretty meteoric, pretty epic. And that's potentially around the corner. Now, another thing is, look, when the gold, the market's trying to find a little bottom here again. When the gold starts picking up ahead of the market, and then the market starts rallying, that usually means the Fed is in there doing something to push the market higher. So that, because when the traders get wind that the Fed is sort of whatever they're doing, pumping money into the system, whatever, it tends to be positive for the metals.
Right.
So. No, but if we do have a really bad, if we do have a sort of an 87 type event, you could see gold, up $50 or $100 here, in short order, and it might not give that back too easily, thereafter. So we'll have to see. But it's this. I mean, it's I'm looking at, when you look at the gold this morning, down down at $10 or so, 26 or 25, 23, and it looks kind of like death before this report coming out, and then all of a sudden, bang, you see gold. Oh, what I was really going to say is the other side of the coin is when you do get, we've had record after record of unemployment, lower claims, and everything like that. We had the first hint of trouble, which I think we mentioned yesterday, was this 24,000 new, higher employment claims, unemployment claims. And secondly, now we've got the jobs to, confirm that. The third element is that when the unemployment starts rising, it's very bullish for gold. That's the biggest and best buy signal you will ever get. And the fact that gold is effectively $300 higher today than what it was at the bottom of this cycle, even though unemployment has been falling, the fact that gold is running ahead of itself, if you like, in my view, is extremely bullish for the next up leg of either flat or possibly even rising unemployment. And we did rise a little bit today on the unemployment rate. And it's very, very hard. I mean, I don't know what it is, but it's. I mean, we're at 45-year lows in unemployment, and they really are fleeting. The amount of time that unemployment is at a record level is very short-lived. It's even you go back to 1952 when we were briefly at about 2.5% unemployment. In spite of the fact that we had a boom in the 50s, unemployment was higher in the rest of the 50s, and then the 52, it was almost a down spike, if you like, in unemployment when it was a 52 number. So as long as unemployment is rising, it's very, very bullish for gold.
As long as unemployment is rising.
Is rising, yep.
All right. Let's see. Brian says gap was filled today on the ES. I'm thinking that a retrace may be short-lived unless short covering gives a bit more. Have my computer back. I'm ready for one good trade and closing out. Okay. All right.
So now we're heading up again, Dwayne. This thing. So what I was saying about the gold stoking the market, it's trying to rally here again. So it just shows you, it's kind of interesting that when gold and the market are going up together, it's very good in my view. That's the perfect scenario.
Yeah, gold looks.
That's what drove the market higher from 2005 to 2007. This is when you get an inflation-aided market, if you like. For a couple of years, you get the sweet spot where gold and the market go up together. It's the best of all worlds.
Now, we've been consolidating in this weekly trading zone here these are 30-minute candles. There's 1, 2, 3, 4.
Yeah, there's a big move coming because we've been joking around here for weeks now, and based on the fact that the Fed raised rates. I mean, the last time the Fed raised rates, we went up $150 in about a month. This time it's taken its time to get going, but it doesn't mean to say the delayed reaction. When it gets going, it may still surprise on the upside.
Okay, using just a little Fibonacci math, price extensions, we could on this push right here, this could take us up to 1337 and our 1338, and then if we can take out that high, 39.
Yeah, it looks like the 1345, 1345. 1346 levels are beckoning for gold.
Brian, you had asked if I had a radio trade. I don't know if you trade gold or not. Do you stick with the indices?
No, I go for everything.
No. I'm asking one of the guys in the audience, Brian. He asked if. So you don't trade gold, Brian? You trade the indices? Okay. So he was asking if I had a radio trade to give out today, and I'll go look at the S&P. Boy, it's really tough in the S&P because we're right inside of a weekly trading zone, so it would kind of go against everything that we teach to instigate a trade here, because consolidation, that's the market kind of making its mind up as to what it's going to do next. And there's an awful lot of indecision, and occasionally what will happen with a weekly trading zone is it will become like the center of gravity. In other words, price will go below it and above it, and then below it and then above it and then below it. It just starts oscillating with the zone itself kind of being the center of gravity. And then eventually it'll break away, and there's like a magnetic pull, for lack of a better term, to the zones. And so it needs to pull far enough away to break the magnetic pull here, and for the magnetic pull up here to kick in and start drawing it up. Now, this high that we put in today, guys, if you look left, I mean, this was Concierge Trade Alert. What do we have yesterday? There's, was it one, or the night, not last night, but the night before was when the email went out. Hey, at this number right here, 2656, I mean, once, twice, 3, 4 times, and then even a 5th time, okay? And so, where's today's high? Look at the horizontal line, the red line on my cursor. 2656.75. Now, anybody who's trying to say something, and everybody in trading is always trying to say something, but anybody that tells you support and resistance is dead, you know, that it went out with a horse and buggy, that you need this new slick willy thing they got, show them this chart. You know, I don't know. Just show them this chart and say, are you sure support and resistance is broken? You mean it really doesn't work anymore? And they'll go, oh no, you need this. It flashes and makes sounds.
Listen, Dwayne, there's all kinds of people out there offering you the Holy Grail every day.
Oh my gosh.
And I'm telling you, listen, I think you've invented a better charting system than just about anybody.
Wow,
because
that's quite a compliment. Thank you.
It's if you simplify it, I mean, it's actually kind of like, a kid could do it in the sense that, or a 5-year-old could. A 5-year-old could probably follow it better than a lot of people, because you get your head in the way. And the point is that at the end of the day, look, it's like Twitter. Remember when we called Twitter down about $16? And then it suddenly shot to 18, and then it took out 20. Basically, when Twitter took out 20, it was a buy, and look at where it's gone since. And in other words, these levels, when they get taken out, they tend to. It's just like gold. Gold was basing out here earlier on. The platinum has been basing out. Look at the platinum. Platinum has been basing out. It's gone down and tested, 9, 10, or 11, somewhere like that, last few days. I mean, check out the chart. It's been trapped in this range between 9, 10, and 20 here for a couple of days. It's starting to break out the high end of the range, and the silver, and I mean, all of these things, the silver and gold and things, are looking quite dynamic here. And even the copper, which has been trapped in this range here for a couple of weeks, if it suddenly decides to break out and gets above 310, you're probably going to see considerable upside. And even the market itself, which has been kind of basing out in this lower range, if we suddenly find ourselves getting above this, I mean, if we clear 6650 on the Nasdaq, 60, and maybe 20. Whatever it is on the S&P, we're going to go a lot higher, probably quite quickly.
What symbol do you use for platinum?
PLN, July platinum.
I don't. think that's going to work for me. Well, no, there's platinum. GPL8.
Could be. Yeah.
Is that the month, or should it be June?
No, July platinum.
So that's going to be GPLJ. No.
J is April. Yeah, could be. I don't know about GP. Look, platinum's not a very good example because it's been. I'm just saying that if it gets, I think if platinum gets over 930, it'll have a pretty big move upwards. Yeah, right now it's still kind of trapped in a range, but you know, all of these metals are being based in a range. But if they get out sort of the high end of the range here, you know, in the next few days, I think it'll be very positive for the metals.
So that was quite a gap. Wait, I don't know if you can see my chart. I've got this platinum up here. A gap lower open? Is that what that is?
Hold on, I'm just trying to get you up. Okay. You know what? They might have changed. They might have, yeah. I don't know. Something's not right there.
Something. Yeah,
we're not on 905.
Something doesn't look. All right. So let me go. GP.
It's not updating right. Yeah, that April platinum's probably not even trading now. So.
Yeah, that one's barely being traded at all right there. So then it has to be
July. That's the one you want.
All right. Volume. What do we got for volume? On a daily chart, yeah, we're definitely in the wrong month. Try M in analogy to the gold. Yeah, that's what I was thinking, Williamson. GP. L.
If you can put a stock up, try it.
Let's see what this looks like.
No, it's N. You want N, July platinum, July. So on.
So GP L N as in Nancy. There we go. Okay. And there she goes. Okay, that looks right. The volume, structure, and stuff, everything.
Now, if you can put royal gold up there.
I can.
Yeah.
What's the symbol?
RGLD. Sorry.
RGLD. Okay. Royal gold. Now, what did you want it on daily, or it's on 1 hour right now?
Yeah, daily's okay. Daily's okay.
Okay, there we go. Daily chart.
Yeah, look, this chart is acting really, really well. Can you squeeze it up? Can you make more available?
Sure.
No, more like a year or so. Okay, there you go. See the way it's turning really, really bullish here. You know, this thing could really run north here in a big way, almost any minute.
Royal gold. Where are they out of?
I don't know, but they're a kind of a, you know, they have a kind of a royalty type of agreement on a lot of gold production, and so you know, it's very sensitive to the gold price. So you know, this thing could it's very highly levered, and if it gets more or less over $100, $110, it'll be making on record highs. So it's not that far away from all-time highs. It's a potential. It's a pretty good. I think it's a pretty good idea where, that we're getting very close to a big breakout.
Oh, there was a question for you earlier, John. Wouldn't you rather have lower unemployment than higher gold prices?
Well, obviously we've got a biased view on that, but we'd rather have higher gold prices right now. But I'd like to have both. I'd like to have lower unemployment and higher gold prices.
Sure.
And we could still get that. So, yeah.
Now, Brian, I'm not sure I followed you on that. Very close to losing the last low, sucker. Okay, Brian, you have to explain that to me. Let's see. And Mike, you wanted a line across the top of. I can't draw a trend line right at the moment with this thing, but I know what you're wanting. Just right across the top there. Yeah. So it could break that trend line, and if it does, then it'll have an obstacle to overcome right here because you got like a triple top right there. So it'll probably have to take more than one run at that to overcome it. But then, if it can take out these three highs here, then there's pretty clear sailing up to like 92, 92.50. And then, I mean, the last attempt up there got slapped down pretty hard, and the market has stayed in check. Hasn't been able to get back above this area. Okay, let's see now. Brian said NQ and indices just had, you'll see it, NQ so far. Okay, let me go look at the NQ and see exactly what you're referring to. NQ. Okay, so the NQ is starting to break to the downside. Now, on the NQ, let's see. 56, 57's weekly zone, and then below that is 64, 68/69. So if we drag this up, 64, 69. Okay, so 64, 69. There is a potential for this to go down to the zone. I don't know if that's what you're thinking, Brian, if this is where you were looking for a potential trade in this area. If you're, here, let me show it like this real quick for you. And I'll just tell you what I think. I'm going to just throw the indicators up there real quick. I think we got more to the downside, but I don't know that you got a whole lot. Yeah, see, got a bearish cross, and prices pulled away. It tried to pull back to the BBC. Actually, it did make it on this candle, but on this one it couldn't. So here's what I'm thinking, Brian. If you're considering shorting the NQ, current price is 60. I would consider. Oh, I got to come off this. No wonder it wasn't looking quite right. Okay, now we got it. Okay, so 30 minutes. The chance that you're going to run into some really good support here is, I think that's what will happen. So if you're going to short the NQ, there's some space, but not a lot. I mean, what are we trading? We're trading 65.05 right now. I think support's going to show up by 64.95. So I would just be careful in that area. I'm thinking that you might find something. You either wait for it to break. Now, once it breaks, it's going. If it breaks to the downside, then your target is right here. Okay. Where the last bullish cross here took place. Okay. Now, there's no guarantees in trading. There's very few absolutes. But if we close below this low of this candle right here, I will, on Monday, eat somebody's hat on live radio if it doesn't go to here. I don't have a hat, so I'll have to borrow a hat. But all I'm saying, and I'm just trying to be funny, if we take out the low of this candle, there's a way station right there, and then see here. That's how that cookie crumbles. Now, I'm not saying we're going down. I'm saying I would have put a trade on right here for that reason, because I need to know what's going to happen. I need to know if this is going to hold as good support or if it's going to break. Once I know, then I can start to structure a trade. On the ES, let's see, you're looking for a trade on the indices. Get rid of the drawing objects. Okay, I got a bearish cross. Price has pulled away. It never did pull back, but again, you've got almost the same thing as the NQ. You need a clean break here, and then you're going to go down to about 25.92, 93. So you got to kind of sit on your hands for just a moment. The Dow, you know, all three are in the same boat. NASDAQ, S&P, and the Dow. If we break to, if we go just a little bit lower here, then we go to this area right here, and that would put a big angry red candle on the daily chart for today. What do you think, John? Are we going to rally into the close? Or
no, it's starting to look like the original 7 scenarios coming into play here, unless we have a rally. You know, we got to watch in the next 40 minutes to see if the market might bottom here around 230 or so. If it doesn't, that'd be very bad. Meanwhile, the nugs and things are going quite well. The dollar is breaking down. There's another thing that's kind of bullish for gold. Also, and the currencies are acting quite well. The other thing I forgot to mention was remember we said yesterday, I think it was, to buy the grains around 103, the beans.
Mm-hmm.
We just hit 1036. I said it could snap all the way back up to 1040. The grains are looking very, very strong in spite of the market being down. So that's pretty good news. So that's pretty much it. We'll see how we go. The VIXs are going high. The VIXs are actually on the high of the day now, so that's bad news. You know, bad news for the market.
Well, this is interesting on soybeans. You see that? You got gap lower. I mean, that's.
Yeah. Remember, I said it's sort of tested. That was the ultimate test. The might getting a little bit of a sell here on the beans, actually, right here, but
well,
the ultimate test.
And we're getting right up to our buy trigger at 1037, and so that would be an appropriate place for it to, you know, roll over right here before it goes through that trigger.
But remember what I said yesterday, that actually it was the day before. You see that down spike? We went all the way down, and then, you know, gapped down and went back up again. We gapped down because of the Dow plunging 400 points, but the grains are ignoring it. You know, remember I said yesterday the markets might drag the grains down. That's sort of happening a little bit, you know. So.
All right.
Listen, have a great weekend.
Hey, John,
thanks very much for the invite.
Thank you for everything, and we'll talk with you on Monday.
Okay, much obliged. Thanks a lot.
All right. Have a great weekend. Okay, Joe. So last night on soybeans, the email said to consider selling 1010, and it's down to 1003. So that's 7 pennies at $50 per penny. $350 per contract is what the market made available. We never get out at the swing high or swing low, of course, because we trail a stop. And when you trail a stop, you'll always leave a little something on the table. And price is hitting the buy trigger right now as we speak. 1037. Late in the day on a Friday, soybeans close early, earlier than the other markets. Okay. So back to the NQ. Last night on the NQ, we had said to consider selling 65.85. 65.85. That was way up here. $65.85. So from $65.85, the initial drop took us down to $64.90. Call it 6,500. So 66. So 65.85. Okay, and so if we made it down to 6,500, that's 85 points at $20 per point. That's a $1,600 per contract trade. $1,600 per contract available. But again, you don't get out at the swing low because you're trailing your stop. If you're trading it the way we teach you to. So there's 1,600 per contract available there. And then at important prices, important areas, almost always tested. So it gets back above the trigger here. And it's now dropped, where are we at? 64.80. So, what do we call that? We'll call that 100 points plus. So, the second move down, $2,000 per contract available, and it's headed for this weekly trading zone at 64.68/69. where I would expect it to find some good support. I guess we already took that chart down. Okay. Did we? Okay, so here on the Dow, look, we took out that low we were just talking about. In Q, we did it. We took that low out. Now, I said right here on live radio that I expected there to be some good support there, or at least an attempt at some good support, and there wasn't. I also said if we break through here, okay, that a reasonable target would be right there, 63.91. So maybe this is your trade that you're looking for, Brian. Now, this is laid out on a 30-minute chart. So we know that we want to get short. Okay, so we can do one of two things. We can run it down to a 5-minute chart. Okay. which it looks like you're trying to catch a bus after it already left the station. So, mo better. All right, this is a range chart, okay? A range chart simply means, based upon what number you assign it, every one of these candles is exactly 4 ticks tall. Now, it's not a tick chart. I wish they had put range in there instead of ticks, but that little R, that's what it stands for. So, this chart has nothing to do with time, has nothing to do with volume. It's all about price. All about price. Each candle exactly 4 ticks tall. And it's moving at a blinding pace. Now, see all that activity that we saw there on the range chart? Still looks pretty heavy over here, right? And so, bearish cross, price pulls away, price pulls back, down, close. But this thing is so all over the place right here, and we're at such a critical area, I wouldn't trade the NQ on a 4-tick range chart. It's just not a good idea. Now, if you increase the range to 10 ticks, okay, that tames it a little bit. See, bearish cross, price pulled away, price pulled back, down, close, nice move, okay. And we pull back up again, and then back to the BBC, down, close. We keep coming back, tag the BBC. You know, any one of those would have been sufficient to give your points for the day. Now, okay, this is a 10-tick range. I'm going to just jump it up to 30 minutes real quick. We're in the process of getting a bearish cross, okay? Now what that means is, here's one right here. When the CFMA1 gets below the BBC, which is the green line, bull bear cross, bearish. When it crosses above the BBC, bullish. Okay. And when you've got the cycle indicator in the slingshot blue and climbing, and you got the CFMA1 blue and climbing, pretty much getting long is all you need to be concerned about. And even if you don't like the idea of being long, at least do yourself a favor and don't go short. Same thing. When we get a bearish cross, you don't have to go short. Just do yourself a favor and don't go long. Okay. Now, this is a 30-minute candle, and it's got 2 minutes of life left in it. Often, you will see in the final, if you're looking at hourly candles, 30-minute candles, you're looking at an hourly candle, the final 10 minutes, or the first 10 minutes of the new candle on an hourly candle, you'll often see more movement, more activity during the first 10 or the last 10 minutes than you do in the other 50 minutes of the candle. Now, how do I know that? Well, it's just from watching the charts. It's just historical observance. Okay. All right, so there's the NQ there. Okay. Now, this is not the lowest weekly trading zone for the NQ that we're approaching, that we just touched. Went from zone to zone. So 469 to 556. That's a paycheck. The next zone below, 68, 69. Ooh, I don't think we're going to see that. You know, you never know. 63, 15. Yeah, I'm not even going to worry with it. Ah. 63, 14, 15. Yeah. Okay. And at the zone, look what happens. I realize it's just a little tiny green candle at the moment. But the fact that it was falling, and slammed on the brakes right there, and at least gave you an inkling of green, zone to zone, that's, you know, from 70, so that's a zone to zone, that's 80 points. That's $1,600 per contract. Will it hold? I don't know. Okay, so now let's go. So we know that the overall sentiment here is bearish. And so if we drop back down to that 10-tick range, my suggestion would be to wait for this to fail, which it's doing right now. Get a bearish cross. Once that bearish cross happens, now we keep putting in new lows. I mean, low, lower low, deep pullback, lower low. And so with this kind of volatility, I think you just have to think bigger picture, and very, very difficult on a 4-tick range to manage this kind of volatility. And this is, you know, by all accounts, this is unusual, to say the least. Okay. Joan says, I just changed my ES to 8 ticks. Does that make sense? Well, I mean, if that's what you wanted to do, then yeah. And so I'll show everybody what it is you're looking at now. So that's 8 ticks. It's an 8-tick range chart. Every candle is exactly 8 ticks tall. Bearish cross, step number 1. Price pulls away, step number 2. Price pulls back to physically touch the BBC, step number 3. Down close, step number 4. Sell the open of the next candle minus 1 tick. Step number 5. And that's all, folks. Bearish cross. Price pulls away. Price pulls back to physically touch the BBC. Down close. Red candle. So the open of the next candle, minus 1 tick. So let's see, that candle opened at 26.31. Okay, so it'd be 26.30.75. The open. I'm going to have to change the resolution for myself. I'm sure all you young kids can see it just fine. And the close, or the low, 26.25. So it's not a huge move. 4.5 points, but it's a nice textbook move. Red and falling, red and falling. And we get this bearish cross here, but we have no pull away, which is part of the rules-based methodology. Now, as you move from rules-based to discretionary, if that's a move you ever choose to make, by no means do you have to. When these lows are taken out here, the market's trying to do something. Okay, this is on the 8-tick range chart, and I only put up 8 tick because Joan mentioned that she was running that just to tame it a little bit. Yeah, Joan, it does tame it, but you just have to keep in mind that along with that comes increased risk. In other words, your stop loss will need to be bigger, and you have to decide if that's something that is going to work for you. Off that initial little setup there, which had 4.5 points in it, right here, this little move, if you know that the conditions are bearish because you've looked at a higher time frame, you don't want to get lured in by this, okay? Because just as that was a red candle, it could have just as easily closed green. I mean, if you just stay away from these types of trades because they're contrary to the current environment, that could be half the battle for many people right there, knowing what to stay away from. So let's run through these real quick. On the S&P, well, we just hit the weekly zone at 2603/2604. So from 2642, last night's alert, goodness, We've done, well, 42 S&P points. It's $2,000 per contract. If you stayed in the trade all the way down, most people aren't going to do that. Okay, like for instance, you know, the last trigger was right here. Okay, you had some pretty nice gains, and then it pulls back, and you watch those gains evaporate. Most people are going to exit the trade. It doesn't go quite far enough to create a new trade. I mean, it's got to get above the trigger. Got above the trigger here, and I mean that was a nice little trade in and of itself, from 42, I don't know, down to what, 34, 35, 7 points. Call it a day. All right. So see, we hit the zone. Now look what we're doing. We're bouncing. On the Dow. I don't know if I updated any of these on the screen. Is that this week? 24. No. It's not this week. It's just, let's see, 23, 850. Okay, now, I don't want to sound like I'm tooting my horn, or it's not my horn anyway, it's our horn. Okay? Our horn. And Monday morning at 6:15 a.m. Eastern, every one of the CFRN partners had this in their inbox. So if you're a partner and you have the Concierge Trade Alerts and you chose to sell 24,210 last night, you know, you could have picked up a couple hundred points and called it a day. I'm done with you. And here we get the same situation where we get a nice drop, a couple hundred points, and then it pulls back almost enough to instigate a new trade. So it's going to be the rare individual that had 200 points of profit, $1,000, $5 a point. Your instincts should kick in, your rules, your whatever. You're trailing a stop. Something should have taken you out. Okay. If you stayed in this all the way down, well then, wow, good stuff. But again, Monday morning, 6:15 Eastern, all the partners had this. So if you were trading this and looking for a target to the downside, I mean, that might have been sufficient to keep some folks in the trade. Might have been. Or you could have taken profits here, and then when it didn't establish a new trade, you could have gone to a smaller time frame, just brought out the indicators, and determined where you wanted to get short. Maybe you wanted to wait, you know, to clear these lows, because once those lows are cleared, which is simpler for the market to do, because it's always going to do one of two things. It's either going to tag this one or the one overhead. So once we take out these lows right here, this is what I'm talking about. Once we take out, I don't have that drawing tool on this chart. I guess I don't. All right, doesn't matter. Okay, so the next zone up is 24060. There we go. And that one would have to be off by. There we go. Alright. Alright, so we've hemmed that in. Now, the next rung up, 24,355. Again, these all went to the partners Monday morning. 24,355, 24,360. Okay. And then above that was 24. 440. Oh, that's right. The highest zone for the week was 25,020. That was way up there. Okay, so here it is, bouncing on this zone, trying to make up its mind. That's the Dow. Okay, so we covered the S&P. It's bouncing at the zone. The Dow, bouncing at the zone. The Russell. Have I? Okay. This is what went out Monday morning. 1515, and once they're published, they're they're carved in stone for the week. We don't massage them, manipulate them, or change them in any way. So 15/16. That's where we are right now. The zone over that overhead was 28.29. And over that was 47.48. Now, if you're new and maybe you're wondering, well, gee, today's Friday, why are you just putting these up there now? Well, because these are for the partners, and it's something that they get, an email they get every Monday morning, and I usually update it for the entire audience on Thursday. I just did not get them all done yesterday for the audience. But the partners know what they are because they get the email. I gotta change the resolution, something on this chart. It's not working for me. So anyway, important prices, important areas, almost always tested. I mean, you just see that play out again and again and again. Now, what's below 1516? The next zone below is 1502. I think it's a reasonable assumption that if a person had two things, well, there's a universe where you have two things and a universe where you have three things. In the two universe thing, if you had the Concierge Trade Alerts and the weekly trading zones, that would be, well, I think, you know, you could probably get by with that. But in the universe where you have three things, that would be the weekly zones, the trade alerts, and the indicators. Okay, because the indicator set will guide you whether you're on a 1-minute chart, a 4-tick range chart, a monthly chart, a volume chart. Now that 0102 is not the lowest weekly zone on the Russell, but I don't think we're going there because it's in a land far, far away, 1467/1468. Now on the NQ zone below us, 6869 is going to be way the heck down there, 6314/15. Okay, we already looked at it. Yeah. So based off the alerts last night, the NQ, that was a $1,600 trade, and then it handed out a $2,000 trade. When we slice through a zone, and this applies to all markets, when we slice through as if it's not even there, what we typically expect is for price to pull back to the zone, confirm that it's good support or resistance, depending upon which direction the trade is, and then for price to continue in the direction of the slice. It didn't work out. This is not what I would refer to as a textbook example. Okay, I mean, it did pull back, then it dropped, and then it pulled back again, but you get the idea. Zone to zone, basically. That's the whole idea, the whole concept, the whole whatever. What's gold doing? Gold is still inside of that zone. Okay, now these are Fibonacci price extensions up here. This is this week's zone. This is this week's zone. If it climbs up out of here, these are all reasonable expectations. Okay, isn't the Russell zone, isn't the Russell below the zone at 1506? Let me check. What I've got for this week's zones, 1515/1516. And below that I've got 1501/1502. And then way down there is 1467/68. Way down here. That seems a little out of the picture, but hey, zone to zone, didn't quite make it to the zone there, but it got high enough to qualify as a fresh trade. Okay. Oh, okay, Williamson. Now I think maybe I'm following you. Okay, so you don't think it'll reach the 1501 zone? No. I certainly think it could. I was saying that I highly doubt it'll make it to the lowest weekly zone. And the zones, when I talk about the lowest weekly zone or the highest weekly zone, it's not that we expect price to go to the lowest zone and then go to the highest zone. It's, think of it kind of, and I'm just speaking to everyone in general, think of it as like a gridiron, a football field, you know, with the little white lines. You got the 50-yard line, the 40-yard line, the 30-yard line. So basically what we're doing is we're creating a we're just creating a playing field. with the weekly zones. And when we publish the highest zone, what we're saying is that come close of business on Friday, we don't think the market will close the week above that price, whatever that price happens to be for the week. And the lowest weekly zone, we don't believe will close the week below that. And so this creates a playing field, if you will, in the middle, where you have these different zones. If the lines are not perfectly straight, I'm sorry. I know there's a horizontal line tool. Yeah, in fact, the horizontal line tool I have designated for that reason. So when I drop a horizontal line, I'm dropping a weekly trading zone. See? Now, the way I do that is simply getting everything set up the way I want it on the horizontal line tool, and then right here, custom text, WTZ, that's how I make it say WTZ. Text option, custom text and current value. You have a couple of options there. You can hide it, current value, custom text, or text and current value. And then when you click Save as Default and close it, every time you drop a horizontal line, it's going to drop like that. So I know sometimes people wonder, man, why is that guy worrying himself to death with this thing trying to draw a straight line when he could just drop a horizontal line? Well, now you know. Okay. So the weekly trading zones create our playing field for the week. Okay. We know what the rules are. We know where our boundaries are. That's a better way of saying it. We know what the boundaries are. And so now we're going to operate inside of that and price each time it reaches a weekly zone. Okay. The most likely thing that will happen is consolidation. As it makes up its mind, is it going to the zone above or is it going to the zone below? And after the consolidation, move is on. And so if you have reason to, now some partners just trade zone to zone, but that may not be you. But once price closes above this and establishes that it's at least trying to move higher, well, you have a pretty good idea of where that target is going to be. Okay. This is the consolidation that I'm talking about. Now these are 30-minute candles. So that's a lot of consolidating. We got an hour, 2 hours, 3 hours, 4.5 hours so far of the market trying to determine here, is it going to make a run at 1345 or is it going to make a run at 1330? Personally, if it showed some downside strength, weakness, however you want to look at it, I'd want to get below the low of these candles, right? Now, I put this in earlier because it's a 38% Fibonacci retracement, as I recall. From this low to that high, 38% retracement. So if price were to start dropping, okay, number one, I want to get below this low before I get short, because there's just not enough room to monetize. I mean, there is space, but to get in and to monetize it, there's not enough room. Okay, and as soon as you take out the low of that candle coming down, bang, you run right into the 38% Fibonacci retracement. Is there a high probability that when price hits this number, if this is the direction it goes, that it will bounce. Yes. Why? Because a lot of people trade based on Fibonacci, or Fibonacci is a part of their trading methodology. Okay? You don't need to spend years learning Fibonacci. Spend 30 minutes with me and you have a pretty good handle on it. Okay? From the low to the high, we're going to pull back to the 30. If we pull back to the 38, okay, you should get a bounce. Bounce is probably sufficient to give you your goal for the day. And if we come down and hit the 38, it'll also be a perfect place for price to pull back up to the zone, confirm that it's going to be good resistance, and then continue its way down. So I probably would not look to get short until 1332. And that only gives me 2 points before I hit the zone. And on top of that, if I get short at 32, I'm going to run right smack into the 50%. Now, just because a bunch of buyers come in and start buying at the 38 doesn't mean we're off to the races, we're going to take out this high and blah, blah, blah. But what it does mean is it will usually create enough of a bump that us mere mortals can go in and get our goal for the day. Okay? Look at that, 62. Hiding right, 62% Fibonacci retracement, hiding right in the middle of that zone. 1329.30. But again, late on a Friday, we've been consolidating for all this time inside that zone. And we spiked on the S&P, we spiked the weekly zone at 0304. And never, then the next candle opens and we're starting to build green. So this 2642, yeah, it's still basically a 40-point drop. All right, the Dow, okay, still at the zone. The Russell has dropped below the zone. Okay, so that question about could we go to 1501 slash 1502, it is, I believe, more likely now than it was when the question was first asked. Let's pull in some reinforcements here and see what we see. Okay. Twice looking for 2591 from 2604. So you're on the ES, Brian. Let me look at that. Okay, so you went short at 2604.75. Is that correct, Brian? Huh. Okay. Well, in this instance, it seems to be going in your direction. But that is an unusual trade to short 3 ticks above a weekly zone, only because the chances of that being good support are, well, there's a high probability until proven otherwise. So obviously you've done well if you got in at 2604.75 and you already hit a low of what, 98. Yeah, so that's great. But I would keep that in mind, because typically, I mean, I'm really glad it went in your favor, but that's a big caution, big cautionary tale. And let's see, Williamson said the Russell's got big support at 1509. 1509. Okay, I don't see the big support at 1509. Can you go into some detail on that, Williamson? I'd like to. I would like to see what you're seeing. The other question. Oh, Brian says, look at your 4-point ES. My 4-point ES.